All right, gang, good afternoon. Happy Mother's Day. Hope you guys enjoyed your weekend. Let's go ahead and jump right into this here. First one that I'd be looking at for you guys is going to be AA. Now, ideally here, I'm kind of going contrarian with this one, looking for a bounce. AA is technically stacked to the downside, but it is above the 200 day. So what I'm looking for is a bounce off the 200 day and a return back up. And now, obviously, I would keep a stop on this. If it broke to 200 day, the play would no longer be alive, and I'd want to get out for a minimal loss. So what I'm looking at here is selling it naked down to 45s. This is going to give you a lot of wiggle room. There's a good amount of support there. It gives you, what, $15 of wiggle room if you did want to hold it. Now, if you want to go defined, you're looking more at the 55s here. And, well, that is below the 200 day. You will be defined, and you'll be right around some support level here. Okay, so with AA June monthly, selling those 45s with 80 cents in two contracts, going to give you, $160 for $900 in buying power. An 89 pop, pretty good odds here. And then, like I said, the defined risk would be the 55.50s. Now, it's right at 30 delta, $1.35 or better. Okay, 66 pop, good credit, one contract. Okay, less than $500 at risk. You could even consider a $3 wide. Now, it's not the most, right? You want what? About 99 cents on a $3 wide, 30, 60, 90. But if you're okay with the risk to reward, you could do a 50-47 just to get you a little bit further away. Raise that pop to 77 and do something like two contracts. You'll still be less than $500 at risk, but you'll be right at an expected move. Okay, so a little bit another way there to kind of give yourself higher probability. Okay, a little bit more wiggle room. All right. The next one that I'm looking at is going to be American Airlines again. Now, I know this was on last week, but we're going to throw it on again. It did break the 200 day on Friday. All right. So really, I'm just looking for it to stay in this channel. And it's really been in this channel. I mean, if you don't count the two peaks here, it's been in this channel since pretty much December of 20. Really hasn't gotten too far out of that. So I'm looking at just selling a strangle here. Okay, be slightly short skewed at as well. So as we break down, because moving averages are still bullish, but we did break below the 50 days, so it's got run room down to 16.5 and then all the way down. So really, I'm just looking at getting above, the highest high here since November, and also covering the current low. All right, and giving a little bit of wiggle room. So with this one, American Airlines, June again, sell those 12 puts and those 23 calls, 3 to 4 contracts, right? If you did it right now at 34 cents, I'd probably only do 3 contracts. That's 10 short deltas, 83 pop, $100 for $700. Okay, if it's only, come tomorrow, it's only 33 or even 32, then I'd go 4 contracts. Still less than $1,000 for 128. You get a little bit more short delta. So not too bad there. Okay. Next one that I'm looking at is BMY. Now, I'm actually looking at BMY for a covered call. Okay. It's definitely very bullish. Ever since it made its low back in November, it's ran up and made an all-time high. Got a squeeze with some upward momentum coming in on it. It bounced right off that 21, perfect run up, consolidation. We're squeezing, looking for it to break out this all-time high. So I would be looking at a covered call, which would be selling the 80s and buying 100 shares. Okay. Now, if that doesn't work for price or whatever, then I'd be looking at a at the money put spread, unfortunately, and that's a 38 delta. It's just a little high, but not too bad. You'd be below the 21, you'd be right at support, and then you could just ride the squeeze out. So the covered call would be 100 shares, and then June selling these 80 calls, $75.85.95. Profit is going to be about $415, $3,700 in buying power, 53% probability. Okay, and then okay, well, I don't want to do this. Well, then that's fine. You can just do the 75.72 with 2 contracts. Excuse me. That'd be a 62 pop, so slightly lower than what I like to see, 65.66. but you get 128 bucks. Even at 60 cents, you get 120 for less than $500 of risk. Another option, if you're like you didn't want to do that, you could sell the 80 calls here in June and do what's called a poor man covered call, then go out to Jan and buy like the 70 calls that are in the money. This is only going to cost you $890, but you don't get to collect the dividends if you were to hold it that long for dividend anyways. All right, so it's 3 different ways to play this one. Next one that I'm looking at is Craft KHC. So this one as well, looking at selling a short put. This has been choppy, but it took off here after 2 earnings ago. And I'm looking for the squeeze to take it long and break out of the 45 area. So I would be wanting to sell them 40 puts to get you below all 3 moving averages. A good level there. All right. Or if you have to define it, unfortunately, you got to go against another one that's at the money, but it's a 38 delta. The 42s, you'll be below the 8 EMA, but I really like to be below the 21. So when you take a look at this one, selling those 40s, 2 contracts, 55 cents, 50, 55, going to give you just shy of an 80 pop, about $1,000 to put on. If you have to define it, you go here, sell the 42, do the 40s, 60 to 65 cents. Going to still be less than $500 of risk and a 61 pop. Okay. All right. Next one is Pfizer, PFE, right? Just looking at doing a long skewed strangle, and I would really want to see this break the 200-day. Pfizer's really just kind of been consolidating in this range, so I want to lean it a little long, but give it some wiggle room. Looking for it to break that 200-day. It's been struggling with it for a couple of days now. So I want to sell above resistance here, but right at it here. So it's going to be the 57.5 calls, and then I want to sell below support, pretty much right at it, those 41 puts. It's going to give a lot of wiggle room to work with on this one. So you go to June, you sell the 41s, sell the 57.5s, 50 cents if you can get it, right? 2 contracts, less than $1,000, 84 pops, slightly long. Okay. And then the last one is kind of for giggles here, is Twitter, right? Twitter doesn't have the most IVR, so it's a little low, but it'd be kind of like a set it and forget it thing. Twitter obviously is being bought out here at the end of the year and going private, but I don't expect this to trade any higher than what it's currently been bought for, $54.20. So I'm looking at selling above that at 57.5, and then selling a 43 put down about halfway through gap fill. There's a chance, right? Always a chance it could drop in this time frame, but it's going to sell for 54.20 cents. So I want to just cover this range, let it go sideways for a little bit. You might hold it for a while, just because there is no IVR, 3.3. There's 33% in the June cycle, but I don't expect it to move much. So looking at those 43s, $4 past expected move, and those 57.5s, $5 past expected move. 50 to 55 cents, you know what I mean? You're gonna get 100, 110 bucks for less than $1,000 and an 84 pop. You're just gonna have to hold it a while because there's not gonna be a lot of decay. And that's it, you guys. That's all I got. So have a great rest of your Mother's Day weekend. Happy Mother's Day to you moms. Happy Mother's Day to you single dads. And have a great rest of your weekend. Maybe one day I will see you in chat.